So now you know the structure of price action, how to read a chart. It's time for the first formula, Bollinger Band. So Bollinger Band is an indicator that helps us to see top and bottom instantly in 3 seconds or less. And we're going to start by training your intuition in seeing the top and bottom. And then after that, we're going to set up Bollinger Band, and then I'll have a summary to go through what is the sweet spot of using Bollinger Band and where the profit lies. So let's get started. So intuition. So here's a quick example. So as you can see, the black and white bars are the candlesticks, and I have applied Bollinger Band, which is the blue line that is above and below the price. So right now, the exercise is how many bottoms can you see in this chart? And there are 5. So I'm going to give you a second, look at the chart, and see where is the first bottom. Okay, so the first bottom is right here, where you see the candles are going close to the bottom blue line, the Bollinger Band, and then it reverses, and you see that the price goes up. What about the second bottom? Right there. So after the uptrend, price stalls a bit, and then it touches the Bollinger Band again. Now, it doesn't always touch the Bollinger Band, but most of the time it will. So what about the next bottom? Here it is. So, and then the price rallies afterwards. And you can see that for the second and the third one, the price actually made 2 bottoms. So if each of these is like 3 to 4 days, then technically you have 2 weeks to enter into this stock before it rallies up again. Where's the fourth bottom? Right there. See, the Bollinger Band touches the blue line again. And then you can see that there's a 5th bottom because the price subsequently drops further than the previous bottom, the 4th one. In fact, when you think about it, the 4th one isn't nearly as perfect. But out of the 5 bottoms, Bollinger Band helps us identify 80% of the bottoms. So when you implement this indicator, all you got to do is to quickly scan to see if the price is close to the bottom blue line to know if it's a bottom. So what is Bollinger Band? The simplest definition is 2 lines that gives you a feel on where the next top and bottom might be. So what Bollinger Band is looking at the previous wave or previous waves to estimate the size of the next wave. And it is an indicator that looks at the past 20 periods, whether that is days, weeks, or month, and calculate the approximate top and bottom. In a finance term, it's called volatility. And Bollinger Band is also short for BB Band. So the purpose of the Bollinger Band is to predict tops and bottoms, but in this case, we're only going to use it to predict bottoms in an uptrend. So we're not trying to use Bollinger Band to predict a trend because we have something else that do that. Another indicator that does the trick. Bollinger Band is only used to predict an uptrend. And if you stick with that, you will make a lot less mistakes, which means you'll save a lot more money. So there are 3 stages of Bollinger Band: flat, expanding, and contracting. So when you're looking at flat, you can see that the blue lines are relatively flat and price is within the 2 blue lines. Once something fundamental changes in the stock market, the Bollinger Bands will expand as price goes outside of that range. And you'll see that in the second photograph. The Bollinger Band is expanding as the price is moving upwards. And once the move is done and the market reacted to that change and it starts to cool down, Bollinger Band will contract. And that means price has reached a new equilibrium. So if you understand the concept of equilibrium from economics, basically a stable point, when the Bollinger Bands are flat, price is at an equilibrium. when the Bollinger Band is expanding, it means some sort of external factor, whether that's news or insider activity or some new product that is launched, caused the price to change. And contract is after the market has reacted to the change and there's no more news and it's going back to a new normal. Okay, so example. So if you look at the Bollinger Band, you can see that as the price moves away, the Bollinger Band is expanding. Once it hits the top and then the price starts to stabilize, then you will see that the Bollinger Band is contracting into like a narrow channel, and then the Bollinger Band is flat until there's some sort of external shock to cause the price to move up again. Easy. So these can be easily spotted, but this is important because it builds into your analysis. So those are all the things you need to know about Bollinger Bands. So here's a quick chart that summarizes everything we have went through for Bollinger Bands. So how can you tell? Flat BB lines are flat, expand BB lines are widening, and contract BB lines are contracting. So what should you do? Usually flat, you should buy at the bottom. And I'll explain that in a bit, because it relates to contracting Bollinger Bands. If it is expanding, at this point, you should just wait and look for another stock. If it is contracting, what I usually do is wait for a second bottom, because when it first contracts and the first time touching the Bollinger Band, it doesn't usually mean it will have like a upward move right away. Usually the market will stabilize a bit, like it will touch the Bollinger Band a second time before it moves up again. So that's why I buy at the bottom when it is flat. So if I go back to the previous example, you can see that after the contraction, the market actually touches the Bollinger Band the first time and the second time before it moves up again. So that's what I'm talking about. So to help you make a decision faster, I have estimated some probability of success based on my experience with trading Bollinger Bands for the last 10 years. So for the reliability with the trend, when the Bollinger Band is touching the bottom line and the trend is up, this is what I mean. The flat Bollinger Band is 70% reliable. Expanding Bollinger Bands while touching the bottom is 25% reliable, and contracting Bollinger Band is 50% reliable. So that means if you just look at the probability, you should probably go with flat because the chance of you succeeding is a lot higher than expanding and contract. If you're against the trend and the Bollinger Band is touching the upper line, so the trend is up and you want to short when the Bollinger Band is touching the upper line because you think the price is too high. When it is flat, I would think your success rate is 5% because A, going against the trend is always bad, and B, going against the trend just makes the BB band so much less reliable. So one of my personal rules is never go against the trend, and I only trade up because it's a stock market, so there's a natural tendency to go up. So second part, expanding, and then uptrend, touch it and you try to short. Again, you're going against the trend, so I will really advise trading against that unless you know something for sure that will happen. And finally, contract. So usually contract is pretty reliable, but then when you think about the profitability, you're in an uptrend and you're trying to short, your profitability is greatly reduced and your risk to reward ratio will be very unfavorable. So that's why I only trade with the trend with Bollinger Band. So in terms of profitability, obviously the flat one is the most profitable, and then contract, and lastly expand. Yeah. Okay. So what does it mean to you? So now you know how to use Bollinger Band. You can easily predict bottoms in a flat trend. So in the world of stock investing, if you're just looking at a stock that has zero growth and you just buy at the bottom based on a natural fluctuation, you would already make 10% if it reaches the top and then back to the bottom. So on an average market, the market only makes 8% a year. So if you buy an index fund, the max you can make is 5% to 8%. But by using Bollinger Band and invest in an upward trending stock, your return will be so much more than just 10%, hence beating the market. So for example, if you buy the low, which gives you a 10% discount, plus an annual growth of 10%, then it's 20%. And that's how big mutual funds makes 10 to 20% a year. So Bollinger Band is very easy to use and is always my first filter of my complete trading strategy. I wouldn't even look at the company performance, insider trading or whatnot, before looking at the Bollinger Band first. So now I'll help those who are not familiar with setting up their charts to set up Bollinger Band. Okay, so here I am at Trading View. Okay, let me get rid of these. So in order to go to Trading View, just type tradingview.com. Then you can type a stock that you want. So in this case, I will type Microsoft because that's my example. Well, my computer is definitely not the fastest. So Microsoft. So now I'm at a Microsoft chart. So notice I'm using a weekly chart. Black means up for my candles and white means down for my candles. By the way, I only use weekly charts because I'm a busy full-time professional. I work 50 to 60 hours a week and I have no time to do day trade. And from my last 10 years of experience, day trading has been not profitable simply because you spend too much time and your decision quality erodes over time. So anyways, implement Bollinger Band. Indicator. Click on top, type the word Bollinger, and the first one it is. So you see that my Bollinger Band might be set up a little bit different than yours because I customized it a bit. So on the upper left hand corner, if you click on the little icon format, then I can change it back into default. So that should look like what you have now. And the setting is 20. 20, that means 20 and 2. That means the length. So the indicator will look at the past 20 periods, calculate the standard deviation, which is the volatility, which is looking at the high and low, and so on. And so that's fine. That's the standard calculation. And under style, I usually remove the background and the basis. So we don't need the middle line, basically. So we just have the upper and lower line, and that's what we're using it for. So get rid of these. So as you can see, I can see a bottom here. Bottom, 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 bottom. And these bottoms are the triggers in which, I would think, oh, okay, maybe I should do some analysis over Microsoft. It seems like a good time to buy, just looking at the chart alone. So that's how you set up the Bollinger Band. So that's it for Formula 1, Bollinger Band. And next up, we're going to talk about EMAs. So EMAs is to help us to spot a trend instantly and to help us make Bollinger Bands so much more effective. And it gives us additional evidence to support the potential bottom for a Bollinger Band. So stay tuned and watch the next